doesn't look like it's working.
What the fuck? No, it says live. It's live. No, it says live. It's live. Yeah, no, it's good. It's good. It's good. No, it says live. It's live. Okay. Alright, bet. Alright. Okay, let's go to trading view. You can see it, right?
No. New certificates are up. You might want to tell the Discord.
So you're telling me you can't see the stream right now?
No, I can't see the stream.
Interesting, because I see it right now. I don't know.
You see it on
I see it right now. Yes, I don't know.
You see it on
I see it right now. Yes, I don't know.
You see it on
Yeah, I see it there. I see it there. I sees it. I sees it.
Oh yeah, I see it. What the hell? Why didn't I see it on the other one?
Sheesh. Alright. Let's run this. Alrighty. Alright, George, I'll call you later. I'm gonna do the stream. Short Bitcoin, short indices. Goodbye. Bye. Alright, let me remove the embedded link. Copy text. Let's blast that out. Blast. Okay. Okay. Discord. Okay. What is good? All right, let's take a look. Yo, what's up? How are you doing, guys? What is going on? All right, so let's get this money. Let's get this money. The fundamental fucking king is here, and I'm ready to drop sauce on everyone. Okay? Just know that I'm here and I'm locked in. I'm ready. All right, so yeah, yo, everyone, if you're watching the stream, appreciate you all. 150 people just popped in. Make sure you're subscribed to the Fortunes YouTube. We're going to be giving away random challenges, as we always do, to subscribers and people that are interacting. I'm going to be paying attention to people who are in the chat. Like, this is something we're going to be doing a lot more frequently. So, again, you guys support me. I support you. I give you free things. You guys give me your time, your attention. You learn something, absorb value. That's the exchange here. So, I appreciate you all again. 154 people. We're locked in right now. Yeah, so okay, I'm gonna kind of get started a little bit. Overall, like I said, if you pay attention to my free Telegram, if you watch the breakdown I just dropped, I absolutely believe that we're running out of steam here. You know, like we're going to make a lower high here. Personally, so the reason why the market shot up is because the rate was hiked as expected, right? So when you have something that's as expected, sorry, I'm dark. Okay. When the hike is as expected, what that means is typically it prices in stability into the market. Okay, so understand that we were anticipating, that's what forecasted was 5%, and we received 5%. There was no surprises. There was no 5.25%. There was no the rates weren't halted. There's many scenarios that could have happened. So when we have the rate as expected, that's something that we expected. So typically when the show is going as is planned, it means things are going according to plan. So when things are not going according to plan, that's when you start to get deviations, right? So that's why I'm speaking about the initial reaction. The initial reaction was bullish for indices and bearish for the dollar, right? So basically what's happening is the market is saying, okay, we expected that we were we were kind of expecting the Fed to go a little more aggressive, and obviously because of what's going on with the banking crisis that's going on with Silicon Valley Bank and Credit Suisse, we are now experiencing the Fed is printing money, right? Like if you watch my breakdown, you would know. If you go to the Fed balance sheet, you can see because of this banking crisis what the Federal Reserve was. I don't want to say they were forced to do it, but this is what they decided to do. They decided to print more money, right? So if we take a look at the actual balance sheet of the Fed, right? This is, public information here. I don't know why I'm so zoomed in. Okay, so if we look at the last look at March, right? March 1st, March 8th, right? They stepped in and printed all this money. So you can see as we started tapering the economy, right? This is the balance sheet. If you don't know what the balance sheet is, the balance sheet is the amount of assets that are owned by the Fed, right? Like basically the net worth of the Fed, like what do they own, and what denominations of assets do they own. So as the Fed is starting to taper the economy, right, so we can fight inflation, right? Because remember, inverse correlation between economy and currency. So when the currency is strong, the economy is weak because the dollar is expensive, right? That's where we are right now. But what got us here was a strong economy and a weak currency, right? We basically grew the economy too quickly. We printed too much money. We overstimulated after COVID, and that's what got us into this inflation mess. So what we have to do is we have to pull back the economy in order to save the currency. But now with this banking crisis, we had to basically stimulate the economy once again. So we basically unraveled all of the progress that we made over the since November, almost 6 months, has been unraveled in 1 week. All the Fed printed all this money just in 1 week. So that's very bad. And basically what's going on now is the market is pricing this in. We're going to see more devaluing of the dollar, and we're going to see short-term strength. That's why I said risk on flows short term. Risk on means like you want to be risky. You're buying risky assets. So stocks are considered risky. So that's what's being priced into the market right now. However, I don't believe that it will be very long term. So let's actually go to Jerome Powell here. Let's go to Jerome Powell. Let's see. No, Federal Reserve. Oh, here it is. Sorry. Shoot. Guys, let me know if you can hear this as well. The sound. Let me know if you can hear this as well. The sound.
Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials.
He's just regurgitating a lot of the same things he says.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation.
JG, you're funny, bro.
We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Yeah, that was generic what he said. Same thing he said all the time, but he didn't really say anything positive.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week.
Bullshit.
And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market,
looking at the trade,
and on inflation.
I'll write it in the chat when I'm in the trade.
Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes maybe, some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook,
Yeah,
and in particular on our
hikes,
assessment of the
Jerome,
actual and expected
inflation
effects of
goes
credit
up after
tightening.
you printed fucking more money, you fuck. Like, this guy's ridiculous, bro.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time. And in principle, if that means that monetary policy may have less work to do. We simply don't know. So,
do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
I wish I could ask him a question. I'd tear him up.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or
I would
are
ask
you waiting
him about
to see it in the
money
data
they just added to their
before
balance
you
sheet? How does he
incorporate,
feel about how does that going
that
to
potential tightening into your
affect
forecasts?
ongoing inflation
So,
data?
we've just come from an FOMC meeting, and
That's what I would ask him.
the people who write the minutes will be very carefully counting. But I'll tell you what I heard. What I heard was significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that did turn out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first 5 weeks of the intermeeting period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements?
Yeah, usually, let me turn it off. But usually, when you get news that's as expected, it's not remember, it's not a shock. So typically, you don't get as much of a strong reaction because what's already priced into the market is what has happened already, right? So usually, you get the drastic moves when the number is drastically off of what's being expected, and then that's when you get a lot more adjustment from the market. So it came out as expected. The speech was pretty neutral. I mean, he's pretty much just brushing it over.
Hi, Victoria Guido with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Yo, if you guys are watching the stream and you're not subscribed to Fortunes Funding YouTube, you played yourself. You're not going to get free funding challenges. I give away challenges literally every other day. So if you want free challenges, make sure you're in the Discord. Make sure you're on the YouTube. Make sure you're present. I give away free money. Free money. Free money.
Right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning we sat down and said, let's do this. And he was obviously going to lead it in his capacity. So I don't, my role was to announce it.
The Discord is in the
I get briefed on it, but I'm not involved in the work of it.
Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes. I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector. And that is, that's just something that will have to come through softening demand and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, people are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina?
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to
I don't know why you keep asking
the
about the
questions
$1 million
around
account.
supervision.
I still trading
So
it,
at a
bro.
basic
Like, I post
level,
it all the time. I just
Silicon
took off the
Valley
login,
Bank
bro, 'cause people kept
management
bugging me,
failed
like
badly.
you. It's just,
They
I
grew
don't
the
want
bank
people
very
bugging me. I
quickly.
should
They
show
exposed
people
the
what's
bank to
possible.
significant
Whatever. I
liquidity
actually
risk
took
and
an L on that
interest rate
account at
risk.
first, and then
Didn't hedge that risk.
I've been trading it just
We
fine.
now
bro,
know
so
that supervisors
it's still there. It's just not public anymore.
saw these risks and intervened. We know that the public saw all this.
Thank you for the blessings.
We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, and a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear to your last question. It's clear that we do need to strengthen supervision and regulation.
No shit, bro.
And I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
And the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened, and so that's really the nature of the of the review, is to discover that.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. Bro. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Let's go to Rachel Siegel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and
Sure,
I really don't
it is.
see that as
Wonder
at
why.
all analogous to this.
Why is it
Would
well
you be open to an
capitalized?
independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I could follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
If you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right. We have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
Absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively
He's got him
is working.
tongue-tied, bro. He doesn't even know what to say.
And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah, I don't know.
Oh.
Simon Urbanovich with the
See what
Economist.
happens? They
Thank you very
start
much.
grilling him with the questions.
Chair Powell,
and
you've stated
this is
twice
what
today
happens.
that all
Damn,
depositors'
look at this.
savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings?
This is
Shouldn't
about to
Congress have a
rip
say
down.
in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial
It has
system.
to pull back. It has to pull
and
back.
We're prepared to use those tools.
But look how the
I think
H1
depositors
candidate
should
is
assume
closed.
that
That's
their
bearish as fuck.
deposits are safe.
Go to Greg Robb.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government.
Damn,
We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well. So far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And I mean, there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to...
Mr. Mike, please.
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether
Guys, I literally called this exactly. I called this exactly what would happen. I told you it would be short-term risk on, flows up, and then the true move during the press conference would be bearish. Did I not say that? If you watch the breakdown, if you're in the free Telegram, you know, I honestly, I just didn't take an entry because I was kind of just listening to the speech, but it's pretty obvious. It's pretty obvious. I don't really like trading at this time, especially with like big positions, because the slippage gets really bad, but it's pretty obvious here, man. Like this shit's going down for sure. 100%. I mean, how do you know I don't have cells open right now? Maybe I do. Maybe I just didn't call it. You don't know. I mean, I gave you guys the tools, to be honest with you, but definitely, I think it could pull back to like 500 and then drop, but it's definitely bearish right now. I wouldn't be looking at any buys or anything like that at all. So, yeah. Where should the TP be? I don't know, man. You gotta watch it.
At the lower end of the wage
Go
spectrum,
down
it's
back to the
just a
lows.
place that we should try to get back to.
Jean.
I think we're gonna fall hard.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
You know, it's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. You know, the question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and you know, we're certainly trying to find it.
Trying to find it.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. You know, what can we do to make sure? But again, that's not for me to answer today.
So you don't have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, you know, this review's going on, and you know, I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. You know, it just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, you know, to this work, not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were
okay.
to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, what will be the extent of it, and what will be the duration of it? And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, and so that's all I have to say. So,
Thank you.
Thank you very much.
Thank you, Jerome. All right. That was interesting. Kind of what I anticipated. He really just glazed over. He made things seem nice and pretty, and the banking system resilient and strong, and it's this and it's that. Of course, it's strong and resilient because we just printed billions of dollars. It's pretty obvious. We went from this is in millions of dollars. So this is 8 million millions. So I don't even know how many trillions this is, but I think it's trillions. This is trillions of dollars, possibly. I don't know how much it is, but it's 200,000 millions. So what is that? 200,000 millions? I don't even know how many that is. 300 billion? Oh, it's 300. Yeah, it's 300. 300 billion. Well, that's quite a lot of money, isn't it?
Good afternoon.
Yeah, so that was interesting. Overall, I think it'll pull back now. It's kind of going to be low volume for the rest of the day, but overall, we still raised rates. The rate went up. Okay, so the Fed still applied pressure because they know that if they take the pressure off, that inflation is still, they know that inflation is still looming and it's still an issue. So they got over the banking crisis, sure. They fucking printed money like they always did. That's not an issue. They could print as much money as they want and plug up all the holes. But what comes now from, it's like cutting a hole in the boat to patch up a hole somewhere else. It's like, well, now you got another fucking hole here that you got to patch up. So, yeah, it's going to be interesting to kind of see what develops from this going forward. That's kind of what I'm curious to see. The shorts made sense to me because just the market was definitely overlonged. It was overbought, whatever you want to call it. It pulled into an area of support, dynamic support and resistance, right? It missed the supply zone. That's honestly why I didn't take any trades, because it never mitigated my daily supply. It was never mitigated. So that's pretty much why. It was very close. Came very close. But it didn't hit. It did hit the quarter point, so I was kind of looking at it there. It did have a micro break of structure. Around here, right, we have higher lows, higher lows, higher lows, higher lows. This is the 1 second time frame. So understand this: when the market is very volatile, you can use very low time frames. I've gotten comfortable with the 30-second, the 15-second, the 10-second. These very low time frames. You have to be very careful about them. But when they print in the right areas, that's when your structure can be very good. And when the market is very liquid, it's pretty good to use. Now, you can't really use it as much here, right? This is let's say, pre-London, post-Asian session, right, where it's just very choppy. But as the market, look how much the candlesticks change. This is the 5-second chart. Look at the difference in the candlesticks from pre-London to now, to FOMC, like where we have insane volumes in the market. So you definitely get you have to be tighter with your analysis, and if you know structure is king. So if you know your structure is breaking at a point of interest, that's the biggest thing, is being at the right place at the right time, and seeing the right technicals, seeing the bias change, seeing the Powell. You know, people are grilling Powell. You know, if he stumbles his words and he starts stuttering and he's like like. You can see the shorts pile up. You know, people are. It's very. He's being scrutinized heavily at these press conferences. So I think right now the market kind of broke these lows. Right, it grabbed liquidity above these lows. So I think it just sucked in a lot of sellers. It'll probably pull back like around, maybe around 500s to 600s area. I wouldn't touch it right where it's at right now. Overall, I do think it is short. Daily candle is probably going to close bearish. So it'll probably close and then make a wick back into here and see if we can make a lower high on the daily. But yeah, I mean, I think if you already were in the short and out of the short, if you're not, then I would just kind of sit on my hands. That's what I'm gonna do. I haven't slept in like a day and a half, so I'm fucking tired. I've been working like a dog. How much did they print? $300 billion is what the what's the consensus is. So yeah, I think a short-term pullback higher from where it is right now. It already went from supply to demand, so at this point I'm not really interested in it anymore. But it was interesting to see. My anticipation was correct, right? As we saw the short-term risk on flows, and then price came down and corrected, which was pretty much what I anticipated. Yeah, bro, day and a half, bro. I'm fucking locked in. I'm locked in, bro. I don't sleep. I don't need to sleep. I'm a robot. I'm different, bro. I'm built different. I don't need to sleep. Yeah, that's pretty much it. Anyone have any questions? Yeah, I saw what you said earlier, bro. To be honest with you, about like hiring people, I mean, we don't really have a lot of positions available. We have a lot of staff, bro. Like on Fortunes, we probably have 100 employees at this point. So right now, we're particularly filled up with staff. I mean, I'm not saying that we couldn't have a place for you in the future, because I'd love to employ people that can provide value to the company, but you'd have to have a role for the company that's not already filled, or you know, something that you can provide more value than what's already being fulfilled, right? So yeah, bearish on indices. I mean, it's just gonna range right now for the rest of the day, but I think it'll probably come back up a bit and then possibly reject. But it's already the end of the day. I would just turn your charts off and go have yourself a nice day. You know. The links you have on Insta were for the old stream. Love this. Oh shit! Did I put the wrong stream up? Fuck. Did I put the wrong stream up? No way. On my Instagram? That's whack. That's what I did. That's terrible. Oh no, it's the right one. What are you talking about, bro? What are you talking about, bro? I've been referring people, bro, but I don't have a business certificate, so I find it hard to sign up for the affiliate program. Anything to do about that, bro? You don't. What do you mean what do you need a business certificate for? You do need sleep for the gains. That is one thing that you absolutely do need sleep for, and that's one thing that I sometimes sacrifice against my will. You know, I don't really necessarily want to do it, but it's just like if I want to be awake for certain things. I'm up trading London session. It's 5 a.m., 6 a.m. Okay, now either I go to sleep, like, or I kind of just, you know, vibe for a bit and stay awake. For New York, it's tough. Like, I pick and choose my battles, but, you know, my life revolves around the markets, and I make whatever sacrifices I can and have to be present for all of this, you know? It's not fun. I'm exhausted. I'm not gonna lie to you. Like, I am tired. There's no question about it. But this is what I'm passionate about. Like, I enjoy this. Like, I'm sacrificing my sleep by choice to do this. You know. US 30 to 26K. Yeah, I can definitely see that. The Fortunes Funding took me to the last one. Sorry, maybe it was just on my side. No, I think the Fortunes Funding one, I did probably put the wrong one on here. I'm gonna repost it. Yeah. Can we look at DXY? It's required business certificate when signing up for the affiliate program. I don't think that's true, bro. You need a business certificate. I don't remember having a business certificate. The Signal Room just opened up, bro. It was just open like a few days ago. So if you missed the open Signal Room, then that's on you. Yeah, we're not really doing too many promotions. We did so many promotions. I don't want to oversaturate it. So we have one promotion running right now. It's going to be running for the rest of the week until Sunday, the spring break promotion. So if you guys want to get funded, like obviously I'm going to tell you guys to use my funding program, but truthfully, honestly, Fortunes Funding is the best funding program there is. Like there's no question about it. Between everything, the prices are cheaper. There's no minimum trading days. You get longer time limits. You have free retries, EAs. Like there's nothing. We have every feature and then some. Our broker is better. What more could you want? FTMO 100K on FTMO $650. Ours is $450. Like how can you? We're like almost half the price of FTMO. You know, for the same exact thing. So FTMO just has a better name. That's all they have. Swaggy C's. I mean, it's all right. Like, I mean, you can go compare it. I mean, go compare it right now. What is it? Secure the bag funding, right? That's what it is. That's what it is, right? Where the hell is it? It's not even. Yeah, FTMO is a better name for right now, 100%. Bro, we're taking off. We're taking off. So, the people that know me and know what I do and who I am, they already got involved, and people have nothing but great things to say. So, but it is what it is. You know, I'm not really. I love it. I'm building a new business. It's cool. You know, like it's an experiment for me. I get to try things, and you know, just at the end of the day, it's only the competition is always good for you as a consumer. The more competitive something becomes, you end up getting what I'm doing is I'm undercutting the market. I'm forcing people to tighten up their pockets, because what I'm doing is by offering a cheaper, better product, I'm giving back to you guys. And if a competitor wants to compete with me, they have to lower their prices. They got to make their shit better. So that's all I'm doing. I just came in and said, okay, how can I make this better? What can I do? Okay, if I don't make as much money, I don't really give a fuck, like, because it gets the offset gets passed off to you guys as a customer, and you guys win. That's what I care about. I know what it's like to be a trader. You know, I actually came up off of trading. I'm not a marketer. I happen to I know how to market, but I'm not a marketer. That's the difference. So, pretty much, yeah, that's what I'm all about, man. I'm just wanna pass. I just want to pass things back to you guys, you know, and do some dope things, like take people to places they've never been to. Let's fly to Dubai. Let's go to fucking Bali. Let's go to Japan. Whatever, bro. Like, it's fuck it. Like, you know, we only get one life, bro. It's short. Let's do some cool shit. So I can't wait to start making YouTube videos and you know. So again, if you're on here and not subscribed, we're gonna do some crazy shit. So just strap in. We don't have max trading days. We have no minimum trading days. So you obviously don't know anything about my prop firm if you just said that in the chat. Swaggy's giving 96% profit split on a scaled account. That's after the account is scaled. He's not giving it on all accounts. So you have to read the fine print. First 50K payout? Yeah, we'll definitely do something for sure. I mean, I'm about to fly Marquise down to Miami, and we're going to do a podcast with him. And we're going to I think he wants to go skydiving with me. I mean, if he doesn't want to go, he doesn't want to go. But we'll do something fun. We'll rent some jet skis. We'll go on a yacht. We'll go to a club. We'll have some dinner. you know, we'll just live what it would be like to be free. Like if you just had unlimited, that's what I want people to understand is like if you had unlimited time and unlimited resources, how would you live your life? What would your life look like? That's the biggest message I want to convey to people is what's the POV? Like the hardest thing for people to like, that's what's so hard about trading is like there's a light at the end of the tunnel, so far away at the end of the tunnel. Some people are like, yo, can I even get there? You know, and I want people to know what it's like when you get there, so you have that taste of what it's like, and that desire will fuel you, right? It will keep you fueled when things get tough. So that's the biggest thing. Yeah, free retries, unlimited free retries, 40 days for phase 1, 80 days for phase 2. Like, bro, there's name one thing about my firm that is like any other firm is beating, and it's just not true. It's just not true. What is his prop firm? Secure the Bag Funding, is that, or Secure the Bag? That's what it is, right? Bag, it's securethebag.com. That's what it is. Let's see. Secure up to 96. Yeah, he just wrote up to 96%, but that's not what you actually get. So you guys have to read the fine print because people like they show all these nice bells and whistles. You can only get funded with 300,000, so we can fund up to 500K. Like I'm not trying to bash his prop firm, but let's dissect it, right? Let's dissect it, right? So the profit target is 10% and 5%. Our targets are lower. We have 9% and 4.5%. So our targets are 10% lower, which is a big difference. That affects the pass-fail rate so much. When you lower those targets, even by a little bit, it makes passing the challenge a lot easier. So things like that. Minimum trading days, right? The prices. What are the prices? Let's go to the prices, right? His 10K account is $140. Our 10K account is $109, right? So you guys have to go on a website and start looking at the rules. Just look at the parameters. Look at everything. You have to look at everything. That's how you determine what's a good prop firm and what's not. So, I mean, look, our 10K, $109, 9% target, 4.5%, 40 days, 80 days. You get 35, 65, so our days are longer, our targets are better, and our prices are cheaper. And receive up to 96% of your profits. I don't know. Yeah, it says up to 96%, but it's not. They need to adjust this. What is the actual payout split? See, again, it says you will receive up to 96%. Your payout ratio could be, it's saying could be. It doesn't actually say what your payout is. It doesn't even, right here, 85-15. So they keep saying 96%, 96%. But you guys have to understand the scaling plan is like, it's like impossible. It's not impossible, but it's so unlikely for you to ever scale your account to this amount. Like, this means nothing. You're getting 85-15. And if you use our promo codes, you're already getting 90% or higher. We just did a 91%, a 92%. So what about this prop firm beats my prop firm? Again, not trying to bash anybody, but yo, this is competition. This is fair competition. So yeah, that's pretty much it. We don't have a news restriction. We have a 2 minute before and 2 minute after rule. Meaning if the news is at 8:30, you can't close any trades or open any new trades from 2 minutes before, 2 minutes after. So if you have a trade from 3 minutes before and you close it 3 minutes after, you're fine. You just can't close in that 4 minute window of the market, which is a time that you don't ever want to be opening or closing trades anyway, because it's an illiquid time and it's just inoperable. The spread, the slippage is terrible. You don't want to be in the market like opening or closing trades 2 minutes before, 2 minutes after anyway. So that's not really a big deal, like, you know. It's 96 for the first month. Where does it say that? It doesn't say that. It says right here, accounts. It says payout split 85-15. It doesn't say scaling plan. That's scaling plan. That's not the payout. Not the payout. So, It's not bad. It's decent, but I don't see anyone beating me. Like straight up, if I'd be honest, I don't see anyone beating me. My forex funds is close because you get more drawdown, but look at their payout split. They're getting 75-25. You get 5 minimum trading days, 30-60. Their targets are decent. Their targets are good with their drawdown. Their accounts more expensive. So there's trade-offs to everything, but on Fortunes, you're getting 90-10 at least profit split. You're getting a way cheaper account, no minimum trading days, longer time periods, competitive targets. Yeah, I don't know. I mean, to be honest with you, the funded trader has some good accounts. I'm not going to lie to you. The funded trader definitely has some good accounts. There's a reason why they're the top 3 prop firm in the space, and they're growing heavily. So yeah, you just gotta, that's what I've looked at all the challenges. I've looked at all the parameters, and I just said, okay, how can I beat everybody? How can I beat everybody? And the broker, remember, all these brokers that these prop firms are using, they all suck for the most part. They almost all, anyone that's using 8-cap, all I hear is how bad 8-cap is, 8-cap slippage, 8-cap spread sucks, 8-cap did this to me, 8-cap that. AirFX, bro, everyone loves AirFX because it's a great broker. And I made sure, I was like, yo, AirFX is a great broker. I'm going to make sure that AirFX is on my prop firm because I need the best of everything on my prop firm. So, pretty much, all right, I'm done talking about Fortunes Funding because that's all I fucking talk about sometimes. But yeah, I mean, look, I did say price would pull back as well, pull back into the 500s, 600s almost. And I do think we close like this, we'll probably make a lower high and go lower, but I really do think we're going to head down. We should come back down into the daily demand down here. Probably probably refine it down to H4. Yeah, I think we could come down to 31,650. 31,650. I took the sell in the 500 zone and made profit. Let's go. Hell yeah. How come AirFX and HeroFX have the same spreads and commissions? Because AirFX and HeroFX are the same broker. They're the same white label of the same broker. They're the exact same copy. AirFX, HeroFX, Carbon Capital FX, and Athens Markets are all the same. Believe it or not, it's all the same owner. It's just like, you know what it's like? It's like Jeep, GMC, Chrysler. They're all the same company. They're all the same company. They make different skins on the cars. They're all the same shit. That's how a lot of this stuff works. It's all the same technology, just reskinned, given to this person does this person does that. It's all just regurgitated versions of the same thing. So I like Air because, I mean, that's what I use, obviously. That's just what I'm using. I mean, HeroFX is great, Carbon's great, they're all great. Air is very good. I mean, I have a personal relationship with the team at Air. They help me out. If anyone needs help, I take care of people. Like if someone hit me up and said, yo, like I need my money ASAP, or like, yo, my withdrawal is messed up, can you help me out? Bro, I help people out all the time. I go into the support, I help people out, I get things expedited, I find out what's going on. I help people out. Like that's what I'm here for. As the ambassador of the brand, that's what I'm supposed to do. So yeah, that's pretty much it. Are you gonna do lives this week with the Signal Room? Yeah, yeah, I am. I mean, I didn't really see any trades earlier this week. The only trade I really saw was would have been, I guess, today potentially, but it kind of just didn't develop how I wanted. What do I think of KOT? I think KOT has a very big name and they're very popular, but they aren't the best. I think their fees, if you go look at the fees on KOT versus the fees on Air, not even, go put in one lot on US 30 on Air and go put in one lot on KOT and tell me which one is more negative, which one you pay more fees on. Go take a look. Go do it on a demo account. Go test it. A lot of you guys haven't even tested this. You guys don't even know how the spreads, the commissions work, and that's what the worst part of it is that it's your money and you don't even know you're being silently robbed, like right in front of your face, So just go take a look. Go test it out. Like, you guys have to record these things. Like, go look at the spread on US 30 on KOTs. 2 points. Always. It's a fixed 2-point spread. On AirFX, the spread right now is probably 1.1 points. So that means you're saving 0.9 of a point when you enter a position on Air. Which means on one lot, you save $90 every lot that you trade on AirFX. So yeah. I'm finna live like my life limitless movie. Literally, LMAO. Even if I lost everything, at least deep down I'd be happy and have a story to tell I experienced others couldn't. 100%, bro. 100%. Fake it till you make it, bro. Embody that, and it'll materialize in your real life, bro. Yeah, AirFX is lit. Again, I'm not gonna a lot of the people market things. I'm not gonna market a product that's not superior. I just won't do it. Like I did that by unknowingly. I had a partnership. These people told me, that's what happened with Yellow Peacock. I was like, they told me, hey, we're gonna have all this technology, we're gonna have this, that, and this and that, and then none of it ever came. And then I stopped my partnership with them, and it cost me money to break up that partnership. It cost me a lot of money, but I just told them, I was like, yo, like all the things that you promised are not happening. So this product you are offering sucks. So I don't want to be partnered with you anymore because your product sucks. So because of that, that's what happened to Yellow Peacock. So I won't actually promote a product that I don't believe in. Simple as that. Which account type is better on AirFX? Raw spreads. Raw spread accounts are the best accounts. Will you increase max capital on your firm? I mean, 500,000 is a lot for right now. I would like to increase the account sizes to maybe a 300K or 400K account and potentially upgrade up to like 600,000 in total funding. And as the firm gets bigger, yeah, I'd like to do bigger accounts, like maybe $1 million accounts or something like that would be cool. So that's kind of what I want to do. It's just gonna take time. Remember that Fortunes is only 2 months old. We've only existed for 60 days exactly on the dot. Today is the 60th day of the company. So it takes time. It takes time. We just got to be patient, let it flow, kind of. We got to make sure we manage our risk properly. We don't want to pull a Silicon Valley bank and go bankrupt, So it's important that we manage our risk. Is 928 promo code lifetime? No, it is not. It is not. It's lifetime for that account, but yeah, the broker that shut down my account, that was a different broker, and yeah, I don't even want to speak about it, but yeah, guys, that's FOMC. Powell was on his heels a little bit. They were grilling him. I think I don't think the market is necessarily believing all the hoopla. I think there's a lot of fear still surrounding the banks. Obviously, the Fed, it doesn't matter, I guess, because the Fed is willing to just print themselves out of any disaster that might come about, but it's going to have unforeseen consequences in the long run. So it's something that's going to take some time to develop, but we should start to see we're going to go down. The big move is coming. It's coming. Just wait. It's coming. I promise you that. But overall, it's very clear structure, right? Higher low, higher low, higher low. Exhaustion, major exhaustion, right? Price has been rejecting this weekly supply for quite some time. Weekly supply, refine the zone, adjust to here. Okay, weekly supply tapped into multiple times, tap, tap, tap. And now we are cleanly flowing bearish. So we have a nice steep trend kind of going on here. Oh, price, look at that. Look at that trend line. I didn't even notice that. Trend line tapped today. Nice tap into the trend line. Lower high, it looks to be printing. A lot of exhaustion. FOMC is a nice catalyst. Yeah, I don't see a reason why we wouldn't continue going down. Possible, like I said, it's possible to pull back a little higher and continue down. But overall, I think we're ready to start falling. We did break out of this higher low trend, right? We had earlier in the week, it was a pretty obvious buy. With the Fed, the Fed had no choice but to do 25 basis points, right? Like I said earlier in the breakdown, 25 basis points was what had to happen, because 50 would be obviously too aggressive, and no rate hike is just problematic for multiple reasons. One, it's going to allow inflation to catch back up. It's going to cause fear of well, what's wrong with the economy? Like, is the bank really okay? Why are we not raising rates still? So I think they did what they needed to do, and I still think we're on course to fall to roughly, like I've been saying, I do believe it's going to take some time, but I do believe 26,000 is in the cards. So that's what I will anticipate. And do you think Bank of England will do 50 points tomorrow? Why do you only activate funded accounts on Sunday, but it says accounts get active after agreements are signed? So the funded accounts get activated on Sunday because our team, we have a few supervisors that activate our accounts for us. They audit all the accounts, they check all the trades, and they are working on it on Sundays. So that's just the day that they're doing it. They work for other prop firms, and you know, they're very busy. So like that's just their day. You know, like they have one day to kind of just do all the accounts at one time. It just makes things a smoother operation. Yeah, like sometimes people get, you know, people are impatient. If people don't get, but a lot of times the people are not getting their KYC done, or they're not signing their agreement, or this and that, and then they didn't get it done, and they're like, oh my God, I didn't get it done. It's taking forever. Like, we get your shit done. When we send your agreement, sign your agreement, get it done immediately, and you won't have any issues. And if you have issues, message me, and I'll take care of the issues. Everyone that needs to be taken care of, I'm taking care of them. So it's that simple. So, but yeah. Can I do analysis on GBP AUD? I'll do a quick analysis. How can you work for my firm? I'm not necessarily, like I said, I'm not necessarily hiring right now. But if you can tell me something that I'm missing that I need to be done, and you can do it, then I'll hire you. Right? If something that's going to be valuable to my firm, but it needs to be real value. You know, it's not just like someone that's going to reply. Like, I have a support team. I have people in the Discord that I pay already. Like, you know, I already have roles filled for that. So, yeah, exactly. Exactly. The haste. People are very hasty, and the faster you go, the harder you fall in trading. So if you go slow, you'll have a nice steady progress. But most people don't understand that. How long does the account merge take? It should take like a day or so. Not much. Can you do analysis on GB? Yeah, sorry. Let's take a quick look at GBP AUD. I'm sorry, brother. Well, it's pretty stagnant right now. I don't have much to say about it. I don't even like where it is. It just kind of broke out of these highs. I don't really see much. It's very choppy right now, to be honest with you. I guess if I picked a direction, possibly bearish, you know, if it maintains these highs, but yeah, I'm not really not too interested in it. I suppose there's a daily supply here that price is tapped into, but I realistically am not interested in it. But it did tap this daily supply, so, but it's already rejected a bit, so I mean, it won't really move much until later tonight or tomorrow. So look at US 30. There she goes. Sheesh. JER 30 is a good sell, for sure. I think the indexes are still good sells. I wouldn't sell them necessarily right now because it is 3:46 p.m. But yeah, I think they're heading down, to be quite honest with you. Yes, sir. Congratulations, Ty. I think I saw you in the chat, bro, in the Discord chat. I think you posted your certificate, bro. I think I got busy. I was gonna repost it. If you want to post it again, bro, I'll repost it. Anyone that posts certificates, I know I appreciate that. It just helps my company, bro. So, you know, congratulations on passing, bro. Take your account slow and make some money, bro. You know, without a doubt. But yeah, I'm gonna jump off, guys. I appreciate everyone that tapped into the stream. I hope you guys took away some insights, and you know, make sure you subscribe. Make sure you subscribe. Make sure you're funded with the realest funding company there is. Make sure you are treating yourself well, taking yourself on lovely dates and long walks with yourself, and you're in love with yourself, and you're romanticizing yourself, because that's the most important thing. All right, everyone, have a good night, good day. I'll talk to you guys later. I'm gotta go to sleep. All right, everyone, take it easy. I appreciate you guys.